So 2024 has been another fantastic year for the markets. Cheers on that one. And what I've really noticed is from 2023, loads of analysts were producing reports, and this is what we're going to talk about today, is to really understand and not necessarily be blindsided by other people's opinions, because we've seen analysts from the back end of 2023 say 2024 is potentially going to be a slower year, as we just came off the back of a bull market, and we've seen double digit returns this year, last year as well, as we approach the new year. So in this video we're going to be talking about expectations, the outlook potentially for the market in 2025, and really reflecting on what went well and personally my portfolio this year, as it has been a very good year. Now, as we all know, past performance doesn't necessarily mean future returns, but it's definitely a good indication of where we could be heading. Now, a good place to start would be looking at January last year. A lot of investors were forecasting that the market had been significantly overbought, which is clear. Valuations were super high, right, which is natural for investors to be a little bit more pessimistic going into that new year. People were saying that we're due a crash within 2024, and the complete opposite happened. We had a fantastic year. We saw double digit returns and returns over 20%, which is fantastic for the overall market. Significant, this growth has been contributed by the Magnificent Seven stocks, pretty much leading the way. They're carrying the team basically going into this year. But I think what's most interesting about this is that Morgan Stanley, a large investment bank, wrote a report saying that we'll most likely see modest returns going into 2024, and the complete opposite happened. It's typical that the market doesn't always reflect to true valuations of each stock. So that basically means how much the stock is actually worth. Even we've been looking at Tesla, we can see Tesla has gone on a huge run, but it's a growth stock. And when you're looking at Tesla, you're pretty much buying into their future growth, their future returns. Whereas when you look at a company like Apple, very stable, they're clearly beating earnings all the time, and they're growing still year on year. So valuations currently are super high compared to what the prices of the stocks are worth today. We can see this through the PE ratio, which basically means you're paying a higher price relative to the amount of earnings the company is generating. So the market is essentially expensive, but it's not necessarily being reflected right now, as we're seeing the market still rally, although valuations and the market is expensive. So that's why it's important to stay invested for the long term. That is my strategy generally going forward, and investing into good companies. So who knows what the outlook could really be in 2025, as we have been seeing irrational behavior within the markets, and that's because people are getting involved in these positions, and people are generally unpredictable, right? Now, I'm not going to read this whole report on this video, but I have linked it in the description if you're interested. But just generally speaking, summarized up, right, the kind of highlights excessive valuations or high valuations, which we've already spoken about, company earnings looking to drop off as well going into 2024, as well as interest rates and the financial conditions of these companies. So these analysts were essentially saying that we most likely see modest returns going into 2024, and as we know, the opposite happened. And the reason why this is important is because as we head into this new year, you're going to see loads of different videos and reports coming out of their people's outlook of the market, but you shouldn't necessarily take one source of information into consideration. You should have a look at different sources and formalize your own opinion. But again, if your trajectory is over the long term, the short years are just noise within the market. Now, you're probably also wondering, why do analysts get these reports wrong? They're literally paid to give accurate outlooks of the market, of stocks, and they do get a lot of things wrong. And the reason being is because they do have a job at the end of the day, and you've got to think of the psychology behind that. They don't want to overestimate or underestimate certain things, and they're being paid to set a specific narrative for the reader. Now, this can involve them with biases, being over optimistic, under optimistic. Herd mentality as well is a big thing. So when you're reading these reports, when someone's obviously being paid to do this, they're not necessarily getting paid to get the right outcome, or not, because no one really knows what's going to happen in the future. They're being paid to, you know, essentially set an agenda and have a look at the facts that have been presented to them, while trying not to get persuaded. So that's why it's important to look at different analyst notes, but never to take them as gospel. It's always important to have a look at your own goals and where you want to go forward within the next, you know, 2 to 5 years, because 1 year shouldn't outlook a whole portfolio, especially if you're looking at the long term. Now, analysts and some publishers are already predicting that the market will have a good year again this year, with returns just under 15%. But this could be anybody's guess. We never really know what will happen in the market. There could be some terrible events that could occur that could shake up everything, or prices could reflect their true value this year. So that's why I think it's important to, again, do your own research, have a look at different sources. And if you are going to not only invest in ETFs and index funds, have a look at good, valuable companies that are making cash, have low debt and everything like that. Of course, this isn't financial advice, but that's generally how I'm outlooking and approaching my portfolio for this year. So that is it for this video, guys. Now, what I'm going to do in my next video, I'm most likely going to create a update of the portfolio. So I'll be covering the stocks that I'm currently invested in, maybe some stocks that I'm looking to get into, or positions that I'm likely to add, as well as my overall strategy for investing, which will pretty much be the same. But yeah, stay tuned out for that video, and again, leave a comment down below of what you think of this one.